Welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So today we'll go through our market update. Then we'll get the Q3 earnings plan results and the Q4 plan rollout. So I pushed all that stuff to the share drive. I'll show it to you there. And that'll probably be most of it. I'm not sure if Joe's gonna, I think he's just gonna chime in. I don't know if he had anything about earnings show, but
yeah, just a couple comments, Josh. Not a big deal.
Okay. Well, let's get started with the market update. End of show. Yeah, my charts. Okay. So you can see from last week, we went from 70 to 60, so a slight drop, in the pie, and most of these are. We talked a lot about the 5s and 7s. We want them to transition to 1, and it's kind of been going the other way, into the 8s. So we'll go into that in a minute. Overall, market-wise, still in the same states. 5 and 5 for SPX and Russell. So we'll review those here in a minute. The market pulse, and I have the 1 and 8 up first. You can see we got a little bit of a pop from last week in the state 8s up to 28. And we talk a lot about those, like the transitions. So back here, we had those 5s, and if you want the bull rally to continue, you're going to need those 1s to keep transition from 5s. That didn't happen here. We had a similar type of event, where all the lines are crossing, and the 1s kind of creeping down here. That's the 7s that have really fell, and the 8s are picking up. So I think a lot will be, it's not a good sign. Obviously, this kind of inflection point where things have been moving. Depending on what comes out of the Fed, they could reverse or, could continue, hard to say. But, dynamics wise, this is showing, similar, not as steep a drop off, but, still kind of a drop off. So, just keep monitoring those, see if we get a pause in the 8s climbing, and move back into some of the 7s. So as far as the lows, nothing really going on here. It's been a while since anything's really flipped up. And that's basically markets, that's October 14th, kind of just grinding higher. So, and that's what happens, we get these grinds higher, not a lot of lows, and because we don't have a lot in 1, state 1, we're not getting like a lot of highs, pretty much the whole year. And if you just look year to date, for those highs, nothing. I mean, 300, you go back in time, we get huge amounts. So nothing going on this year for highs, and we'll just have to see if we can start getting some things into 1. Initial indications are no, but it can flip back and forth here. I think a lot's going to depend on what goes on with the Fed, and these kind of key levels that we've been talking about. Getting over those, I think we can get a bullish rally, if we can get above those levels. SPX state 5, been in there about the average time. Went all the way up to 3, target 3, found support, did another run at 3, big turnaround on those at 4,100 level, which we've been talking a lot about, and that kind of coincides right around that 200-day average and that down trend line. So, it's tested that twice. If we keep banging up against it, I think it would break. But Well, that's kind of the key level right there. I would say you want to watch on, sorry, mute, on SPX here, that 4,100. You know, the big range on the chart here is that 38 to 4,200. And I pulled up this line first, right here, the downtrend line. So you can see we're pretty much right on it. We had that test here, failed, and now we're pretty much right at it. If we can get above that, hold above that, I think that's very bullish overall. The downtrend and the 200, we're probably right above it. So you can see we poked above it here. We're probably right above, excuse me, right above it now. Let's see how Fed reacts to what they're going to hike, and I think what's coming out of the Fed after. So I think that's it on SPX. The big range, that 4,200, right below that 4,250, and right above here. So that's kind of the levels. We're smack dab in the middle of it. So but the key is that that 4,100, honestly. Same story with Russell, kind of doing the average. Pretty much did the average move, didn't get all the way up to 3, but that's because of 1900, which we really talked about a lot. Getting above that, it's going to be the key level. This one really turned around yesterday, so didn't quite get up there. 1886, here, I mean, you can just see we got over 19 there, but big turnaround. So it's really been trying to break through there. So at some point it's got to do either turn over or break through it. So it seems like the market wants to get through it. With the CPI reading, you had a big spike, and then this thing turned back. So quite a bit, but 1900 obviously the key level, and I'll kind of show here. I know we kind of review this on a weekly basis, but this is support, broke through here, and then you got resistance, false breakout, resistance, been really good resistance, but getting above that is going to be critical for bullish markets. Down below 1700 is the bottom of that channel, and that's provided really good support. Haven't broken down through that very much. So really, just watching the top side, kind of a little bit of a conflicting, for the market pulse, kind of showing things have rolled over a little, that can reverse. And then here, it's just a matter of trying to break through, 4,100 on SPX, and then, that 1,900 here on Russell. So, we'll have to see after Fed talk. Really, I think, tomorrow, by tomorrow, we'll kind of know, if we can get through those levels. So just going into Fed, obviously the expectation is 50. I think lower than that would be a real shock, but I think 50 is kind of where most of the money is. I don't think it's going to be, my guess is 50. I don't think it'll be 75, with the current reading on the CPI and things cooling a little. I mean, obviously still elevated at 7.1%, but it's cooled a little. Balance sheet, they did nothing. Nothing. So we're still about a trillion from, that kind of 15% pullback that they did back here where they ran into problems. So, curve highly inverted. So you could see, 1 month, it's inverted to the 5, the 7, all these are inverted to the 1 month alone. So, and that's going to be worse soon after if they, get up to 425 overnight, then, it's going to invert even more, maybe down to the 2 and 3. But, they're doing exactly what they said they would, try and destroy some demand, and I think it's working. What to see, what they do here overall, but everything's inverted pretty hard. I mean, I just don't get like how the 10 years 3.5 and the overnight rate's going to be 4.25. So that's I guess people just saying it's going to be a recession, or they're planning on the expectation is that they're going to cut next year at some point, something like that, in near future. So but obviously key to kind of watch that also. I had a couple charts, graphs. So we talked about this a while ago, that M2 supply, and that's where all, big inflation came from. So I have a follow-on little thing. So this is a pretty cool chart, and this kind of made me a little, more bullish on the market. So basically this is the M2 is in red and CPI is in blue. And what they're saying is, this is offset by 16 months. I don't know who did, figure this out, but, so a 16-month setback as far as the M2, you can see, the CPI peaked up around here, and then, if it follows, and I mean, it's not exactly correlated, but, kind of, did a good job of keeping in, the ranges here. But I mean, it's not exactly correlated, but pretty closely. I mean, this part right here is exactly correlated. So this is basically, if it comes true, if it holds up, what they're saying is, we're going to have a pretty strong drop in inflation overall. So, that's kind of a bullish chart. I'm not sure how long it's going to take, like a year, 2 years, for everything to come back down. But we did talk a lot about that M2 chart, and this being the first year where they're actually decreasing the money supply. So just kind of throw it out there for thoughts and comments on market overall.
Yeah, I usually throw a comment in here, or a question anyway.
Yeah.
So there's, the Fed is pretty much locked in now. They're being a lot more transparent. So they're, it'll be interesting to see if we get a by the news, sell the actual event after today. It'll depend upon the language, like you said.
Right.
So I think I've been hearing a lot of, well, they already have rate cuts for next year baked into whatever the rate is or whatever the prices are. And I'm trying to understand how anybody comes up with that kind of a statement, and what data they look at, or what backs up that reason. I can't believe it. Any rates cuts are actually baked into any prices now, but that's what people are saying. So I'm curious about if anybody has any opinion on that. And VIX today is 21, so it's down at the low end of the range for pretty much most of the pandemic. So after today's news, what do we have until February? Not much but earnings that are going to come out in next earnings round.
Right. And I mean, a lot of the times the earnings is kind of a market grinds higher typically during earnings, but not always. It's been a few quarters it hasn't, like Q1 last year and in the end of 18, and most of the time it'll grind higher during the earnings. Um, yeah,
Well, the one thing that is like gives me a little bit of bullish hope or thought into the future here is that the valuations have come down an awful lot with, pretty much the last, I always heard from a lot of the analysts are like, well, they keep a buy rating, but they've reduced their price target by, 30% or something. So it's like, thanks for that news flash there, guys. But so valuations are coming down. I think that'll help the overall prospects of 2023 coming up. We'll see.
yeah. I think, if we can get over these key levels, could be pretty bullish overall. Yeah, and at the price cuts, I'm not sure. I mean, this, maybe people are all, just looking at this, this chart, we're saying, okay, we peaked. And now we're gonna get back. I mean, historically, the rates aren't even that high, where they're at historically. So,
Yeah, I think that's what a lot of the sentiment is now. Well, it's probably peaked, so we're hoping, it'll come down faster, but we're still not sure, and time will tell. But at least I think that most people are thinking of a breath of relief that all of the really bad news that was piled up on, with nothing but bad news is kind of like over the top. So now it'll subside somewhat. I think that's the sentiment I feel anyway. I don't know what the rest of the people that are on the call think, but I've been a little bit less bearish than I used to be, put it that way.
yeah, I'm feeling similar. So, but really, I mean, get over the levels and then, be a lot more bullish. I'm kind of like, I'm not sure. Before us is pretty much, we're grinding lower, and but I could be flipped, I think.
Hey, Josh, Dan here.
Yep. Hey, Dan.
Hi. What's the source of those two charts you brought up on the M1's money supply?
This one's at Fred. So that's Federal Reserve education site, and you can look it up on. I mean, it's a maze to find that, but this one I just found this on Twitter. Some
Twitter?
guy I follow.
Oh, okay.
Yeah.
All right. Yeah, I mean, we look at that and it makes you think that it's bullish, but then we had other charts that have come up on the screen.
Right.
That,
Yeah.
where whenever you have the inversion, it's always a guarantee. 100% of the time we've had a recession follow, like 3 to 6 months to a year later. So
that's the pivot
I see those, and it makes it hard to get bullish, at least in the long term. I mean,
right. That's why, long term. Yeah, I agree.
Yeah.
I'm playing kind of shorter term.
And I think like right now there's we're in probably the hottest month as far as upward momentum. Everybody is expecting the Christmas rally, and, so I don't know, you take that out and I don't know. It doesn't leave me with a warm and fuzzy feeling.
Right. I don't think anyone's had a warm and fuzzy for a while, about the market. So
Yeah.
that's definitely, a lot of conflicting things, and a lot of these pivots happen at the top, like things ran up and then, they pivot, and a lot of those pivots were near the top of the, market.
Yeah, Dan's comment, more people are saying that more people are running out of money, savings kind of money to go buy stuff that, discretionary items for experiences at high prices. So maybe that'll also, chip away at inflation going forward.
Yeah. That's a good
Josh,
point.
I know you got,
Yep.
I know you got, plenty of things to cover, with the earnings and, with the trade. So, just a couple things from an earnings perspective, is it just try to check the web. No real significant revisions downward. As Dave suggested, it's really been more PE compression this year than anything else. Still looking at earnings growth, for the year and then for next year as well. So the numbers basically are still in that, for the S&P, 215 to 222 range, for the year. That's the S&P 500 earnings. And next year, they're talking north of 225, somewhere between 225 and 235. Those numbers really haven't changed much. So, I keep, and the other thing this quarter, and I think I mentioned it a few weeks back, I can never really find out how much going into the earnings, they've been brought down, those expectations.
Right.
It's hard to track that, but again, this quarter, damn near 71% of the earnings announcements were above expectations, where over history that's closer to 65%. So we continue to probably do better on the earnings side. So, kind of the same message, but no significant downward revisions for sure.
Right. Thanks, Joe. Anyone else have comments on the market? Questions? Nope. Okay, well, we'll wrap up the market talk and get into the earnings. So I posted all this in the earnings share drive, and that links in the email. So you have the plan results, and then you have, that's for has all the quarters since 2020, and then the Q4 legwork with the different trades. So the plan was shared, so everyone, let me log out of this one. I can pull it up. So you can pull it up under the earnings plan. And I'll get this. Yeah, there we go. Yep, so that's a predefined. I didn't count the total trades. I think it's a little less than last quarter, maybe like 10 less. First trades are coming out. They're estimated. The bullish pre-runners would be the 19th, so next week, next Monday. First possible trades, first confirmed would be that JP Morgan. So, and these update daily whether they're confirmed or not. So, but everything comes through. The earnings pre-alerts. When those trades populate. So nothing today, obviously. Okay, let me go through the results. Expand. Okay, so the way this is broken out, all the different types of trades that listed up here, and then we total everything up on the right hand side. Down below, I have the Q2 totals, just for like quick reference. You can see the win rates and the profit loss and all that from the previous quarter. Obviously, you can go look at the different ones if you want to. So they're all in there. So first off, bullish pre-runners. So you had 18 trades confirmed. We had, if you see on the bottom, 23 estimated. So this has been, has not resolved the issue we've had with these. So, and that's just basically since the pandemic. These really spiked. We're not getting confirms on a lot of them. Wasn't an issue too much in the past. So, 17-1. So that's probably the best win rate I've seen on these, 94%. all of these, we try and keep them with, minimum of 1,000, max of 2,500. I try and do that. There was one that popped over here and one that popped over there. I still included it. But obviously, we don't have those, $15,000 CMG ones are populating anymore. So obviously very strong. Last quarter was strong also. For Q2, 92%. So, nothing much to say there. One loss. So did really well. Volatility rise didn't do as well. The last quarter did well, pretty much flipped. From 5-1 last quarter to 1-5 this quarter. You can see it's 83 for the profit. So not that strong. I think this quarter there's only two. They dropped off, so they're not in there anymore. So, the 6 total trades, so it's only down to 2 now because they haven't performed. They dropped off. The Vol Crush, minimal trades, only 2 50-50. One was a bigger loser. Nothing much there. The price non-movers, so some same type of trade, Iron Butterfly from the Vol Crush. This one did pretty well. Better win percent than last time, so 80. I think there was one that was kind of ugly, but or 2 of them obviously. If you're doing 1,000 risks, so 2 bad trades and then a bunch of good ones. So overall net positive there. With pretty good win percentage, 80. Can't complain there. Bullish runners, pretty much ditto the pre-runners. 28, 93% win rate, well above that 78 for last quarter. We did have 6 estimated. They didn't populate. But overall, really strong results. Bearish runners, 0 for 3. Kind of there's still 2 outstanding active trades. They were pretty much like break even, but those did not do well. And last quarter they did better. So pretty much, if we got a bullish market, these are kind of like our go-to strong performers, quarter over quarter. Then the other ones can kind of flip back and forth. So if we have another bullish, quarter. So usually when we put it out, we like to see market at least, trending upwards slightly. Overall, profit 7,000 on, and you can see all the risks down here, the minimum risk, max, then your average risk for each one. I didn't total it for the whole thing, but not risking too much overall. And still getting a lot of estimated trades. So overall 79%, profit factor 2. Let's see what the last quarter. Yeah, little lower on the profit factor, but pretty similar results, maybe a little more there. So all right, I'll open up to questions on this or comments.
I got a kind of, go ahead. I'll defer. Go ahead. Somebody else is speaking.
No, I was just saying the results look good. I'm been pleasantly surprised. Q2 and Q3, considering the market we've been in.
Right.
So impressive.
Yeah, I have a.
Go ahead.
I was going to say I have a kind of a side, just a curiosity question. I was wondering how we had a couple of during earnings season. We had a couple of really big green candle days that were on probably Fed meeting days. I just wonder how many individual things close. And like since they all time, they're not you don't have a consistent amount of things that earnings calls, they happen on just a lot of them happen over just 2 or 3 weeks, right? But I was wondering if there was how many closed out on those big candle days that's the day that a lot of them closed out because they hit their targets of 25% or whatever their target was.
And I'd say, just like offhand, I didn't count them. I mean, you get little clusters, with those kind of nice rally days.
Yeah.
You get like, 2 or 3 like close out here, but they're so spread out over, the season that,
Okay, that's good to know. So you you look at all the data, so you would know. And if we participate in 1 or 2 or 3 here or there, we just don't know. So it's
Right.
kind of good to get your feedback on that. So they're spread out is the answer. Cool.
All right. Anyone else on that? No? Okay. Yeah, and I have the data, Dave. I mean, you can. I'm saying
I trust what you just said. So you answered the question very, very nicely. Thanks.
Yeah. It's all in my filing system. Okay, we'll just move in and just kind of run through, basically we're going through, these are all the spreadsheets. I think everyone on here is familiar with them. Put in, and you can do all this stuff on your own, in the earnings calendar. But just kind of walk through. So as a refresher, so this is the search criteria we put in. This is for bullish pre-runners. Here's the strategy we use. You can set this up exactly, or change it however you want. And we go through and I use that liquid options 2-leg list in the system. So, and the screening puts out like 146 that meet the criteria. So then I go through and test each one from 20 days all the way down to 5. I sorted out, with all the above 80. That's this list here. And then, sort it into best trades. So it has to be, win rate over 90, profit factor over 8, and, conflicts removed. So you can see here, we got 36 overall. And then there's 2 removed because of the high risk amount, CMG, and then Ulta. So so I don't put those in the plan. Obviously, if you want to trade them, you can, but so take this, put them in the alerts, and then they all populate into the plan like you see. So you can go through and do the stuff if you want. I don't think too many people do this anymore, since it's automated by me. So any questions on that? That process? No. Okay.
I think,
Yep.
your process has gotten a lot more robust over time. For those of us who've been on the call and with Delphian for a few years, I remember when, there were conflicting trades, and then there were, they weren't all spreads. They used to be long calls and stuff.
Right.
So over time, it's very impressive how it's evolved and become robust. And to be frank, I don't go to the calendar because, you already showed the automated, or courtesy of you, is going to generate 67 trades or something like that. So, I mean,
Right.
how many more trades do you need in a quarter
Right.
to find yourself, right?
Right.
So,
Yeah, that's a good point. Someone else say something?
No, but we all thank you. I agree with Sudhir. Thanks for all your work on it.
Yeah, I think it takes, I started on Thursday, finished yesterday. So yeah, it's pretty intensive work, but I think there's a lot of value there. And the whole process is like Sudhir said, just, streamlined, and just make it easy for you guys. No one's gonna we used to show you guys how to go through and do all this stuff. And it's just too much, you know. So I went through and did it for all of them. We didn't have any the mover trades. The bearish pre-runners, there was only 2, but they were both high risk, so I didn't include any of those. But similar numbers. I did tweak the liquid list a little bit. I just pulled out because a couple stocks dropped down to like $7 or something, so I just pulled them out. So everything should be over 20 as of last week. But so we pulled a few out of there. But other than that, same plan. Everything's in here for you guys. And if you have any questions, let me know. I think that was it for earnings. Anyone else? No. Okay. I ran through that quicker than I thought, Joe. Did you have anything else, Joe, you want to go through?
Yeah, no, Josh, I just had a couple comments on earnings. Just,
Yeah.
In terms of, what's moving the markets, really, obviously, we get the Fed talk, but then, some of these crazy inflation numbers, and we really don't have any until a week from tomorrow. I mean, we've got certainly, like the Philly Fed and a lot of numbers about the overall strength of the economy, but nothing new, I don't think, on the inflation front until next Thursday and Friday when we get the PCE numbers.
Yeah. I mean, obviously, inflation's the key on the market here. So, hopefully it'll end up, things will roll over like this chart. No guarantees. So.
For sure, and as you've been saying for quite a while here, what will potentially break out there, and I just keep going back to, and you and I talk about this, the extreme levels of the platform numbers, back in, the June, July, August period, really historic in their oversold nature. Not to say we couldn't go back there, but I've been saying I think that's unlikely. So, it's always fun to try to figure out where the market may be headed.
Yeah, definitely.
There is a possibility that I don't think is getting enough talk, or zero talk on CNBC and stuff. Everybody's looking at the yield curve and anticipating a recession because that's always happened before. Right? But what if the Fed actually does pull off this soft landing?
Yeah.
Up and away.
Yeah, I mean, the yield curve has always predicted a recession. However, just as an example, usually when stocks are going down, bonds are going up, almost always. But this year, stocks and bonds went down.
Right.
So the assumption that X has predicted Y 100% of the time doesn't mean that X will predict Y this time.
Right.
You follow what I'm saying?
Mm-hmm.
So maybe the Fed is actually going to, along with some of the bills from Congress, like the Inflation Reduction Act and all of these spending things kick in pretty well this next year. Maybe they pull it off. Maybe they pull off the soft landing. I don't know.
Yeah, one other thing that I noticed that hasn't happened yet, but we haven't to actually say here was the bottom, because we may have already had the bottom. I think that's the point that Sudhir was just making, but we had never really had a indiscriminate sell-off that usually marks a bottom at the end of a bear market. And we kind of haven't had that yet for this one that we got into since June or whatever. So that's been a little surprise to me. I'm surprised we haven't had one shock day that's like 7% down day or something. We've had a couple of big up and a couple of big down days, but nothing really, as they would say, is extreme sell-off at the bottom, to mark whatever the bottom was. Just,
Exactly right, Dave. I mean, some things bottomed in late May. You had mid-June, and then we get into the end of the third quarter, September 30th, and then as late as I think October 13th was another. So it's really been like a 3-4 month rolling bottom. The last big index that bottom was the NASDAQ, which is no surprise because that had been the weakest index all along. So maybe it is different this time.
maybe the multiple compressions like took the place of a blow off bottom kind of thing, and we won't see one because of that. Maybe that's the only one thing I can think of that is like an equalizer of the one event that didn't happen. We had a lot of multiple compressions taken out during a lot of the tech calls. Maybe we won't see one. I hope not, because we haven't seen one yet. So I'm not looking forward.
One of the things I read on earnings and the S&P 500, I think more companies have revised their fourth quarter estimates down than is typically the case, but still, the numbers are pretty darn good from an earnings perspective. So, we'll see.
I will say in the short run, we're up 10, 12% since the last low or something like that. And the green pie has been falling for 6 days, or not 6, maybe 4 or 5 days. So S&P is going up, but green pie is going down, which is a interesting divergence. So leads, at least in the short term, it leads me to believe we're kind of overbought.
Yeah, maybe sell the news today, but I don't know. Definitely, I think it's a possibility. Before I didn't think there was possibility of soft landing. I think now there's a little possibility of, soft landing. So definitely not all bullish, but I think there's potential for them to pull it off. But yeah, I still think it's difficult. It'll be a tall task, but we'll have to wait and
Yeah,
see.
it's threading the needle for sure.
Yeah, so we'll have to wait and see what comes out here. Obviously keep your eye on those levels, and that'll give you a good indication if we can get above those. All right. Thanks for all the dialogue and comments. Does anyone else got anything before we finish up?
Hey, Josh, this is Russ. I got a question regarding the states. When they enter a certain state, do they normally all go up, or for the positive, and the reds go down? Or what's the standard flow once they enter the state? Each one.
You're talking like when it goes into state one, or like any of the states?
Yeah, like state 1, state 2, and so forth. Do they normally, once they enter it, do they normally go up on each one of them, or do the reds and greens go opposite?
I'm not. You're talking about over here on like the pulse chart?
No, in your state diagram when you
Oh, yeah. I mean, the typical, like I go through that kind of like weekly. The typical, like state one, it'll run up, test, and then go here, and it's kind of the reverse for state two, kind of run down, support. It's kind of like the typical motion in those states. I mean, it doesn't always, that's kind of like the base case, but it doesn't always obviously go, the way it's supposed to.
Russ, are you talking about an index or individual stocks?
No, individual stocks like he's showing right now, like once it enters the like state 5, does it normally flow up, or does it normally flow down once it enters it?
Yeah, it should, like any bullish should flow up typically, get up, first level resistance in here, typically it will come back down and then go back up. That's kind of the normal base case, for what happens. So any bullish will
Russ-
be like that, and then any bearish will be the opposite. It'll run, lower and pop back up and then try and run again.
Okay.
Russ, those two boxes to the left of the chart, that's what you can anticipate. And, in the SPX example, you get state 5 occurrences, that they're 14. The SPX has only been in state 5 14 times going back to the beginning of the database in 2007. Okay, so that's what it's telling you there. And over those 14 times, the average current move versus where we are now. And then you get your target projections down below, which are illustrated in the chart. But you'll get
Okay.
that for every new state or
Yeah.
every existing state.
Like if I wanted to, trade on a particular stock and it entered it, I was kind of wondering, is it more positive that's going to go on a bullish side or the bearish side?
Well, the odd states, should send you north, and the red states send you south. One thing that Josh and I will work on is, the consistency or I guess the accuracy of those state calls. That's just something we'll be able to enhance, the way things are, down the road a little bit.
Hey, can I, Josh, have you show something that might help Russ's question there?
Sure.
Can you go to the transitions? Oh, you're on the transitions.
Yeah.
So I do this every single day. I go through, now you only have liquid options, but I do the whole database. And so can you change it to?
You do all symbols?
Yeah. And so something under state 1 and the default in Delphian is if you were to buy long stock, as Russ was saying, and you had your profit target of 10%, stop loss of 10%, and holding period of 60, that's just the default, right? And it tells you like this BLDR is you have a 52% chance of hitting your 10% target. I hit the bulk button and I run the analysis on every single day on all the bullish transitions.
Wow.
And then when the bulk analysis comes back, it has a win percentage, because the analysis is long stock held for 60 days, right? And I just look at the win percentage, and then I will, if there's an ETF or a stock I'm interested in that has, I usually look for above 60% win rate, 2 profit factor, and 10 instances. And then I'll consider buying that stock or ETF. It only takes like 15 minutes a day. Not once you guys added this bulk feature.
Right.
I go through state 1, 3, 5, and 7 every day.
Oh, wow. There we go.
Yeah. So if you do that, when you do the bulk feature, and then I sort by the win percentage, and now sort again because it goes there. So now it's saying everything that transitioned to 1, if you, let's say, I don't recognize any of these stocks right now, but OUSA, I don't know what that is. But if you were to buy long OUSA, you have an 86% chance and a 2.2 profit factor of gaining 10% in the next 60 days. And scroll down a little bit, how many instances is it? Scroll, yeah, right there. 23 instances of this going into state 1. So that's pretty good, right? If I knew what OUSA was and was interested in the stock.
Yeah, I think it's an ETF, right?
Is it? Okay.
No.
But you get my point, is that you can go through all the transitions every day, do the bulk analysis, comes back, sort by win percentage, and it takes like 15 minutes since you guys added the bulk feature.
No,
And that gives you your odds, because the default is long stock. So that gives you your odds of success if you wanted to go long on that stock or ETF.
hmm
That's been very successful.
makes sense to me. Russ, does that make sense to you?
Yes, I probably have to go through it once or twice just to see, you know. How's
Yeah.
that worked out for you?
It's worked out great. I've been sticking to an ETF rotation strategy once I started doing this. I prefer ETFs instead of individual stocks. And in that little, I guess, portfolio, that's beating the S&P. It's up and it's beating the S&P handily. You know, I'll just pick an ETF. Oh, I don't know. Last one I bought was maybe like XLI or XLP, or even, I think it was XLU. But anyway, they showed up. I forgot which state. They transitioned to a bullish state.
hmm
Then in the bulk analysis, they had a very high odds of gaining 10%, right? And so I bought the ETF and they're doing well.
Yeah. Great.
It's
Great
doing well.
ideas.
Now, if you wanted to do individual stocks, you could do that too. But like I said,
Mhm.
I do the 4 bullish states transitions. I do a bulk analysis every single day.
Yeah.
But you're only doing the ETFs, like the 7 ETFs, XLI, XLU, right?
Well, no. I mean, not just those 7. Any ETF. Let me look here. Like, there was one XHE that came up, which is healthcare equipment, and it's not one of the big 7, right? But it had a great. It was like a month ago. It came up as a transition to like 5, and it had really good numbers in the win percentage and profit factor. So I bought it, right? So I don't limit it to just those sector ETFs. It's just, I prefer that over individual stocks.
hmm
How do you filter between the two?
All I'm doing is I just do the bulk analysis, go back to the bulk analysis of state 1. I sort by win percentage,
Right?
and then I just look down the symbol list until the win percentage gets below 60 and see if there's an ETF that I'm familiar with. That's all I'm doing. Like OUSA, I don't know what it is, so maybe I should have bought it, but I've never heard of it, right?
Yeah, I haven't either.
Yeah. If you're watching the market regularly, most of the big ETFs, they kind of stick in my head.
Yeah.
So, but I mean, if OUSA is, liquid ETF, it's showing you have an 86% chance of a successful trade there.
Yeah, and that's just one state. You say you go through them all. Yeah, you could flip.
The 4 bullish states. 1,
Yeah, the bulk.
3, 5, 7. Right. Because this is a long strategy, right? I'm going to buy ETF. So I'm going through 1, 3, 5, 7. I'll run the bulk every single day. When the bulk comes back, I just sort by win percentage and see what. Because some win percentages are, like, for example, they're better when that ETF transitions to 5 than to 1, right? It has a tendency to run in state 5 versus state 1. You follow what I'm saying?
Yeah.
So I just run
Yeah,
the 4.
sometimes 1 can be the top, for.
Yeah, sometimes 1 can be, exactly. So I run all 4 state transitions, all 4 bullish state transitions, run the bulk on them and see what comes up.
Very good.
Okay, going back, how do you distinguish an ETF versus stock? I mean, is there a prefix on that or what?
No, I think just you have to know, you'll have to look it up. I mean, obviously,
Yeah,
I didn't know OUSA was an ETF. I mean, you'd have to go to the,
I don't even know if it is, I guess.
Yeah.
Like, I mean, you can just look it up, the ones that come in. Yeah, ETF, ALPS, O shares, whatever. Whatever that is.
yeah, quality dividend ETF. I don't
We don't
know.
have a filter for that, do we?
Hmm?
You don't have a filter for that in the custom screener, do you?
Yeah, you can filter whatever you want. I mean, so it's only ETFs, whatever you want to create in there, And then you can go in and manually remove stuff too, if you want. So you can have like a stock list you want to trade. So you just search that.
The SEC is making a major overhaul right now, Russ. Maybe you want to send them a comment like that, say maybe, is there a rule of thumb you could use to differentiate ETFs from stocks?
Okay.
Yeah, here's the 5. That's only 5 occurrences. I mean, if you get a name like this, when you hover over it, you can pretty much bet it's a ETF. Like these symbols.
There's that XHE, I think the 6th one down or something.
Oh, yeah.
That still it just transitioned to 5. I must have bought it in state 7. It had really good numbers. And it's showing 75. If you bought it now in state 5, 75% chance of success with a 2.79 profit factor. Right?
Mm-hmm.
So that one it caught my attention in the last transition. So I just looked down this list.
Yeah, definitely good ideas. No shortage of those in Delphian.
Yeah.
If you know where to look, right? All right. Any other questions? Thanks, Sudhir, and good questions, Russ.
Thank you.
Has anyone else got questions or comments? We'll get the Fed coming right now, so at least the minutes. All right. Well, thank you all. We'll do it again next week. I think we'll do a meeting the 21st. I think the 28th we'll take that week off, so no meeting that week, but between Christmas and New Year's. But we'll do one the 20 next week. So thank you all for coming. Appreciate it.
Thanks. Good meeting.
Thanks again for all